Talks about paying off your house like it's the ultimate finish line. No more payments, no more bank, total peace of mind. And to be clear, paying off your home is an achievement. But almost nobody talks about what quietly starts after that balance. It's zero. Because for a lot of people, 3 money problems show up right after, and they don't realize it until years later. This isn't about saying a paid-off house is bad. It's about what happens if you stop thinking once it's paid off. Let's start with the first one. Problem number 1. Your money gets trapped. On paper, your net worth looks great. You own a house outright. 6 figures, maybe 7. But your monthly life doesn't feel any easier because most of that wealth is locked inside walls and a roof. You can't swipe home equity at the grocery store. You can't use it for emergencies without borrowing against it. And accessing it usually means refinancing, fees, interest, or selling. So people end up in this strange position where they're technically wealthy, but still stressed about cash flow. House rich, cash poor. And the more valuable the house becomes, the more trapped that money feels. That's problem number 1. Problem number 2 is missed growth. Once the mortgage is gone, a lot of people feel like they've won. So instead of asking, what should this money do next, they default to safety. Extra cash goes into the house, renovations, upgrades, low return improvements. But here's the uncomfortable truth. A paid-off house usually grows slowly, often just enough to keep up with inflation, sometimes not even that. Meanwhile, that same money invested differently over 10, 20, or 30 years could compound into something much larger. The danger isn't paying off the house. The danger is overfunding safety and underfunding growth. It feels productive. It feels responsible. But quietly, time does its thing, and opportunity cost doesn't send warning emails. That's problem number 2. Now, problem number 3 is the one nobody expects. It's psychological. Once the house is paid off, many people mentally stop optimizing their money. The big, scary goal is done, so urgency disappears. Risk tolerance drops. Curiosity drops. Long-term planning gets fuzzy. Money management shifts from intentional to comfortable. And comfort is sneaky. It doesn't ruin you overnight. It just slows everything down. You don't make bad decisions. You just stop making great ones. And years later, people look up and say, I thought I'd feel further ahead by now. That's problem number 3. Now here's the important part. A paid-off house is not the problem. A paid-off house with no strategy after it is. A house is a tool, not a trophy. If it's paid off, great. Now give it a job. Ask better questions. Is my money still growing? Is my cash flow improving? Is my wealth flexible or just impressive on paper? The smartest people don't stop when the mortgage hits 0. They treat that moment as a transition, not an ending. Because financial peace doesn't come from having no payments. It comes from knowing your money is still working, even when you don't have